So because the Fibonacci retracement tool is used primarily in the market geometry, okay? So market geometry refers to a trading style that uses geometric patterns to find an ideal setup, okay? So it's very simple. With regards to the Fibonacci retracement tool, we can use this to find patterns, certain patterns, right? We can use it to find certain points where price is going to react, okay? So essentially, let's take, for example, this first Fibonacci placement, okay? Because that's all this is. It's Fibonacci placements. It's wherever you place the Fibonacci tool. So this is a bullish retracement, okay? So as you can see here, this right here is a bullish trend with the bullish retracement, okay? So the retracement is a pullback or correction that is going against the main trend. So as you can see here, the main trend is bullish, but then we have a retracement in this main trend, okay? So it's an upward trend. With regards to the placement of the tool itself, you'll be placing it from the low to the high, okay, to the high point, okay? And a bullish trend consists of higher highs and lower lows, okay? So these highs here will consistently, become higher and higher, and they'll never fall below these, the previous high. Same with lower high lows, they'll never fall between the previous low, okay? When it comes to price action, the market moves in waves, okay? So let's pretend that this wave is a 1 hour wave, okay? Within all of this, you will also have other time frames. So can somebody or anybody in the chat or everybody, within an hour time frame, which other time frames can we expect to see within that? So if anybody can put that in the chat, that'd be fantastic. So this isn't a trick question. 4 hour, okay? So to answer that question, there can be the 30 minutes, 15 minutes, 5 minutes, and 1 minute, and then going down to seconds. But I don't think we use that anyway. So all you need to know is that the wave consists of other waves, right? So it's not just what you're seeing in plain sight, okay? So you need to break it down. But with the Fibonacci retracement tool, this is what helps us do that. The higher the time frame, the stronger the trend, the stronger the possibility of a retracement, okay? The upward wave is stronger and larger compared to the retracement as well. So as you can see here, this upward wave is stronger than the retracement itself, okay? If the trend is bullish, again, we start by placing the tool from the low to the high, okay? And as price retraced on this particular example, it retraced to 23.6%, okay? Just to explain how that works, this impulsive move right here, this one here, is 100%, right? The retracement is 23.6% of this move, okay? Of this impulsive move upward. So when we're going in the market, when we're looking for retracements, ideally what we're doing is we're looking for certain levels like the 23.6. Once the high has been created, we can then place this tool. We're looking at the 38.2. These two levels, right? They're called, so if price was to retrace between these two levels, it's called a shallow retracement, right? And with a shallow retracement, what that basically means is the next impulsive move will be very strong, okay? The deeper the retracement, okay, so let's say past 50%, down to these zones here, the weaker the impulsive move, right? So that's one thing that I want you guys to keep in mind, to note down. The shallow the retracement, the stronger the move, the next impulsive move. The deeper the retracement, the weaker that impulsive move, okay? So that's a very important thing to keep in mind, okay? It's very important to have that in mind, because, you know, when we're looking for that next move, we want to know how far that move is going to be. If we need to stay in that move for a certain amount of time, like for example, if it is a deep retracement, we know there's a high possibility that the next impulsive move isn't going to be as strong as this first impulsive move. So maybe we could stay out of that trade, okay? So the next one that we have is the bearish retracement, okay? Similar concept, although with the placement itself, we're going from with the placement itself, we're going from high to low, okay? And then we're looking for that percentage again. Which percentage is this in? So may I ask everybody, which percentage out of 100, so how much is this retracing from this bearish impulsive move? Just so everybody's on the same page. What percentage is this? 38.2. Perfect. 38.2. Correct. Yeah. So we're retracing 38.2% of this move. Okay. So price trends in a single direction. So when I say impulsive move, it essentially just means a quick and volatile movement that covers a lot of space in a short amount of time. Okay, that's all that means, right? So for example, if we was to take a trade like this, we could enter at 38.2% and place our stop loss behind another percentage. Okay, so for example, 50%. Okay, and we also use previous price action in order to understand our entry points, our stop loss, and our TPs, okay? Let's say we've seen a harmonic pattern when we're using these tools, right? We all know that with harmonic patterns, we have our structured stop loss, structured entry, and structured TPs, right? So we can then use previous price action in order to place trades using the Fibonacci Retracement Tool, okay? So like I mentioned, if you guys can see here, weak trends, we could enter at 61.8%. And when I mentioned weak trends, so that's a deep retracement, right? So the impulsive move won't be as strong. Whereas if it's between 23.6 and 38.2, the impulsive move will be stronger, okay? Perfect. So with the next one, we are going to be looking at so if it goes next, expansion. So bullish expansion, we're not looking at retracements anymore, okay? We are looking at where we're going to be taking price to. Let's say we entered at this position. We want to know where we can exit. Where can we expect price to go, right? Because most of the time we put standard, TPs. We might put 50, we might put 100. In order for us to place these, we can have extra confirmation, right? Peace of mind. We can place this Fibonacci retracement tool. Again, for the bullish Fibonacci expansion, we place from low to high, to the high point, and then back to the low point, okay? So it's very important. It's very important. So low to high and back to low, okay? And we only use this if we believe price is going to continue beyond the impulsive wave being used to measure these levels. So when I say that, what I mean is the overall trend. For example, if you're measuring the trend using the daily time frame, where is price going? Where has price been? Is it continuing upward or downward? and that's when we can use this tool to, you know, have more of a confirmation that we're able to enter at this point and exit at this point. Okay, so we are looking at for expansion moves following the impulsive wave in order to see the certain fib levels, you know, to see it tested. So the other one is the bearish. Okay, so again, with the bearish Fibonacci expansion, we're looking for where price can come to. Okay, so same concept, except we're in a downward trend. We place the level from low, so from high, sorry, so this point here to the low point, and then back to the high point. Okay, and then as you can see here, price did extend to this 141.4%. Okay, so again, each of these percentages we can use as potential target points, right? Which can become, you know, this can be combined with supply and demand zones. And these, again, these levels can be used as take profit levels as well. So we can see levels which, you know, go beyond the impulsive wave. So if I just come back to the retracement, right here, we're in the unknown, right? But if we go to this point here, we can, you know, potentially see where price will go to. Okay, so if I bring it back to the retracement, retracement here, so we enter at 23.6%. Okay, potentially set our stop loss behind 38.2%, but we don't know where to place our TP. We simply just place the Fibonacci retracement tool like this. So like I mentioned, if it's an upward trend from low to high to low, and then we have a potential TP. Okay, so it's very simple, very, very simple. Don't complicate anything. Just try and understand what these zones mean. Okay, so let's go back. Let's have a quick recap. 23.6, 38.2, shallow retracement. Shallow retracement equals, if anybody could type it in the chat, that would be so great. Yep, I will explain it in the chat, it's not a problem. If anybody could put in the chat what a shallow retracement means for price action. Strong impulsive move, fantastic. Okay, amazing. And then a deep retracement, let's say, for example, to 61.8. What does that mean for the impulsive move? Weak impulsive move. Amazing. Okay, so we're understanding this. That's fantastic. That's great. So now let's move to the last type of Fibonacci move, which is the, sorry, I'm just fighting with the chat box and the presentation. It's the extension. Okay, the extension, the only difference being we're still looking for target zones. However, the only difference being with a bullish extension, we're placing from the low, okay, of the first impulsive move to the high, okay, and then what we're doing is we're bringing it down. We're not placing it back on the low. We're bringing it down to the retracement, okay. Once price has retraced, that's when we're bringing it down to, and then we can see further target zones, okay. Personally, what I always do is I always stick to the expansion technique. However, you can use this technique as well. It just, you know, it gives you more of a confirmation. So if we recall in our previous market geometry sessions, we had for point D, we had two different confirmations. I don't know if anybody recalls that. If anybody was on my previous sessions, we had to place the Fibonacci retracement tool from X to A to find the first confirmation for point D, and then we had to do, for example, B to C for the second confirmation for point D. Okay. So it's a similar concept in that we're confirming the price action twice. Okay. And again, with regards to the bullish extension, most common extension levels are right here. So 127.2%, and then 161.8% and 141.4%. Okay, so these are very common levels, extension levels that can be used. And again, we're placing the third placement is on the corrective wave. Okay, same concept with the bearish Fibonacci extension. However, the placement is slightly different. We are then placing from the high point, which is up here. So this high point to the low. And then again, we're bringing it back to the corrective wave, okay? So again, it's the same as the expansion concept. We're looking for take profit levels, okay? And potential regions which could be tested, okay? Does anybody have any questions in regards to all of this? So there's three types, okay? There's the retracement, expansion, and extension, okay? And then with regards to the percentages themselves, just get used to labeling these percentages, get used to how these percentages work. Again, for example, being that a shallow retracement means a stronger impulsive move. A deeper retracement means a weaker impulsive move. Okay. And again, with the one thing that I really enjoyed about using the Fibonacci retracement tool was when I first learned about Elliott waves. This tool can actually be used very, very accurately with Elliott waves. If you understand the concept of a shallow retracement equals a strong impulsive move. If you are following the pattern, the Elliott wave pattern, and you have the confirmations to hand, and you know that the move AB equals to so AB equals to CD. Essentially, what you're doing is entering at D, okay, and then you can take the market up. So it's what I will do is I'll go into Elliott waves in a different session. And Elliott waves are, you know, when I first started out, it was one of my favorite sort of patterns to follow. So yeah, I would definitely recommend using the Fibonacci tool. It's definitely a useful tool. So what we're going to do now, if nobody has any more questions, nobody has any questions at all, we're going to move into a live market analysis. Okay, so if I just exit this, we're going to go into the harmonic patterns. So let's choose a random pattern. Let's choose a complete pattern, just to make it easier to understand for everybody. Let's do a bearish crab. Okay. Let's do a bullish crab actually. So let's do GBP CHF. GBP CHF. That was today. So GBP CHF. We're doing the crab. Let's turn this off. So we're doing the crab pattern, which is this one. and the rest of them off. Okay, let's see. Is that the correct GBP CHF? Bullish crab 1 hour. Let's choose a different one. Let's just go to the chart. Be easier. Euro CHF. So perfect. Let's turn this. This one. Okay, so let's use this as an example. I would have liked a bullish pattern. It would be an easier demonstration, but for some reason, this GBP CHF, it doesn't show the pattern, this bullish pattern, crab pattern. For some reason, it's not showing it, which would have been a good demonstration because it's a good retracement actually. Let me try one more time. If it doesn't work, then I'll skip it. Let's see. No, I don't think it's gonna work, guys. Never mind. Let's just do the Euro CHF. Let's stick with this one. Uh, mm, find another pattern actually. What I'm going to do, just for time's sake, is I'm going to use a plain chart, just any chart, and I'm just going to place the Fibonacci retracement tool. So let's do it this way. Okay, so let's get the Fibonacci retracement tool and let's choose a move. Okay, let's choose this move here. Okay, so from low to high. Okay, and then let's just zoom into this really quickly. So now we're looking for the retracements within this. Okay, so let's say we go down to the hour. Actually, the hour might be better to use. Let's actually use this. Okay, this works a lot better. Here. So can everybody see these moves and these retracements? So what we have here a retracement to 50%, okay, around the 50% area. That's right. I'm going to use a different tool to select it. Let's use the rectangle tool. Okay, so right here, you can see the price has retraced to this 50% zone here. Okay. Opacity. Let's change it to green. Okay. Zoom in a little bit. So can everybody see where the price has retraced? So we've taken the Fibonacci retracement tool, we've placed it from the low to the high, okay? Now price has retraced 50% and continued in the impulsive move, okay? In the trend, okay? And then it has retraced again, and it has come down to almost the 38.2% between 23.6 and the 38.2%. So when I stated earlier in the call that it retraces this to that point, what does everybody think is going to happen after it retraces to that point? What is everybody's thoughts on that retracement? So what's going to happen next after that? I know it's a bit cheating because you can still see it, but what's the concept of price retracing to that point? A strong impulsive move. Perfect. And what happened? The price just kept on going. So the price just moved up here, retraced a little bit more, and then shot up, right? So that is, so let's see, let's use this. So that's 240 pips that shot up, right? So we've gone from low to high, and let's say we entered at 20 past between 23.6 and 38.2. Let's say we place our stop loss before 38.2. So at this point, price has then shot up. We can then take partials. We can then do a quick calculation for the expansions and extension tool. So let's do a quick demonstration with this, right? So let's do this. So let's take it from low to the high. So the same low to high. And I'm going to quiz everyone. Where is the next placement for the... Let's do an expansion. Let's do the expansion. Does anybody remember where the third placement goes? Does it go back to the previous low, or does it go to the retracement? Where does the third placement for the expansion? Back to the low. Perfect. Somebody's listening. Amazing. Perfect. Okay, that's really good. So we then have our target levels. This is very messy. I'm going to delete one of them. I'm deleting this one. Right. So now we have our target levels. We have 127.2, which I'm going to move a little bit so we can see it. So we have 127.2, and then we have 141.4, okay? So we can use either of these, right? We can use the first one. We can use the second one. Ideally, what we do is we'll use the first one. Once we reach it, we can then push our stop loss. We can take partials. It's a very good, it's a very good potential target, okay, to take profits. So what am I doing? So if we got into this point, we could have potentially caught, if we only went here, 250 pips, which is not too bad. And then let's say if we entered at this point here, we could potentially catch 230 pips. Okay, so it's a very, very useful tool. Like I said, it's a very good, when I first started, it's very good to use when looking for Elliott waves. when I first started, Elliott waves is all I knew, and I just consistently use the Fibonacci retracement tool to dissect Elliott waves, and you can go into a lot more detail. You can count the amount of hour candles to understand what time to close the trade. So it's very useful knowing what Elliott waves are and how they work. It's a very good technique to understand. I'm going to quickly show everybody an Elliott wave right now, actually. This will be the last demonstration before we conclude. So let's have a look. Price. Okay. So I did this demonstration previously, but we never actually did it with the Fibonacci retracement tool. So let's do so let's start off from the low. Okay, this is a good example of a deep retracement with a weak impulsive move. Okay, so as you can see here, we have that deeper retracement, right? Which then concludes with a weaker impulsive move. So a deep retracement here, which then concludes with a weaker impulsive move. So even if I was to bring this down here, it's still quite a deep retracement, okay? And then continues up. So it's a very good tool to use. Vice versa, what I would suggest for everyone to do, get used to placing the tool, okay? What does everybody use? What trading platform does everybody use on here to do their analysis? If everybody could type in the chat what sort of platforms they use to do their analysis. Okay. Does anybody use okay, so you use TradingView. Okay, that's good. So you have a lot of tools, TradingView. Okay. Does anybody use their actual trading app to do any analysis? So for example, I use MetaTrader 4, and it's not, you're not supposed to do this, but I do it anyway because it's convenient for me. When I do my analysis on my phone, I then check it on my laptop, on my PC. So when people say don't do your analysis on your phone, they essentially they're saying that because it's not accurate enough. Like your placements won't be accurate enough as when you're doing it with your laptop, your PC, using a mouse, a trackpad. On your phone, it's not too accurate. But having said that, if you're looking for quick confirmations and quick analysis, doing it on your phone, there's no problem with that. I use the Fibonacci retracement tool on my phone, and I'm always placing the tool. I just place the tool randomly, and I look for certain percentages. And believe it or not, you can find certain patterns just by placing it. Just practice placing it from low to high. Practice placing the tool from low to high. Okay. That's what I want everybody to do before the next session. I want everybody to place the Fibonacci retracement tool from low to high, take a screenshot and post it in the chat. Send it to me. I don't care if you think that it's going to retrace or if the pattern's already been done or whatever. Just place the tool. That's the first step, because if we don't place the tool, we're never going to know how to use the tool. Okay, the first step is to place the tool. That's it. Yeah, so Dennis, there is another tool you can use to calculate your stop loss and your take profit. So these tools here, it's called a projection tool. So there's a long position and a short position. Let's say if you go long, let's say, for example, you entered this deep retracement at 78.6%. We're then going to adjust our stop loss to fall behind another target zone, like 88.6%. Again, according to your risk management. And then, we can adjust this to according to our risk management. We can adjust it according to expansion zones. So let's do a quick expansion zone. This will be the final placement. Let's do this from low to high. Let's do an expansion back to low. And then we're looking for our target zones here. Didn't quite reach that 127.2% because it was a deep retracement. However, we can look at maybe 100%. We can look in between this. We could look at, between all of this, 100% and 127.2%. So we can adjust it, accordingly to 100% or to this percentage. You'll never have a trade, or you should never have a trade where you're expecting you're leaving the trade entirely to the point where it could retrace back, right? You always want to be taking partials, or if you can't take partials, moving your stop loss. Okay, again, you have these levels here for a reason, to protect your stop loss. Okay. So does anybody have any questions before we conclude the session today? Does anybody have any other questions about the Fibonacci retracement tool? If nobody has any questions now, if you do think of anything later, do drop me a message. Get in touch with me and I'll be happy to help. These are my settings for the Fibonacci. That's the extension, which is fine actually. So you can use these on the, yes, it will be. I will upload it to the YouTube channel. I turn my background off. Okay, you can see here the background. It creates a lot of noise on the charts. And then prices, I turn them off. I keep it to percentages, not values. So percentages are a lot more easier for me to read. And then I keep my labels on the right and in the center, okay? Because then I can then drag my percentages out into a clear plain space, so it's easier to read. And yeah, that's pretty much everything. Like I said, if everybody could please send a screenshot of your Fibonacci placements, that'd be amazing. Then I know that we're actually making use of these sessions. And yeah, it's been a pleasure having you guys on the session. I do appreciate it. If you got any value from today, feel free to drop some fire in the chat. That way I know that I've, if I can just, help one person, that's great. But if I can help, how many people are on this call? 20 people, that's even better. It shows that I'm, doing these sessions and I can keep doing these sessions and, helping everyone to hopefully become a good trader, a really good trader. So yeah, I appreciate everybody for jumping on the session. I know it is quite late in the day. It's the evening. Everybody wants to eat, but yeah, I will see you guys in the next session. What I'll be doing is I will be jumping back onto the harmonic patterns, the geometric patterns. So I'm looking forward to getting back to the patterns. If anybody has any suggestions for any of the sessions, if they want me to go into detail for any of the geometric, patterns or anything, then feel free to send me a message. But yeah, everybody take care. Have a lovely week trading. Have an amazing evening, and I will see you all next week.